The past decade was one of the most profitable in history, but only for those in the right assets. In this video, I'll reveal the top 5 best performing investments of the last 10 years, the ones that turned early believers into millionaires, and even billionaires, and one of them skyrocketed over 7,000%. Let's dive in. In 5th place, we have real estate. With an average compound annual growth rate of around 6.6%, it might not sound like the highest return compared to other investments on this list, but don't underestimate it. Real estate has always been seen as one of the safest and most reliable asset classes. Why is that? Because real estate offers something most investments don't: tangibility and utility. People will always need places to live, work, and do business. Over the last decade, low interest rates, population growth, and urban development pushed property prices higher across the globe. But here's the kicker: real estate has created more millionaires than any other investment class in history. Why? Because of leverage. Unlike stocks or crypto, you can buy real estate using borrowed money, amplifying your returns without needing huge upfront capital. Add in rental income and tax benefits, and you have a wealth-building machine. However, it's not all sunshine and rainbows. Real estate can be location dependent, and it's not as liquid as stocks or crypto. You can't just sell a house in a few clicks. But as a long-term strategy, it has proven to be rock solid. Moving on to the 4th place, it's gold. Gold delivered an average annual return of about 10% over the past decade. That means investors holding on to this shiny asset saw consistent growth, acting as a reliable hedge against inflation and economic uncertainty. It's not the flashiest performer, but when markets shake, gold shines. Have you ever wondered why gold seems to hold its value and even grow over time? Let's break it down in simple terms. First, gold is scarce. There's only so much of it on Earth, and mining it takes a lot of time and money. That limited supply keeps its value stable. Second, gold is a safe haven asset. When the economy is shaky, when currencies lose value, or when inflation hits, people run to gold because it's considered reliable and tangible. And third, demand is always strong. Gold isn't just for investors. It's used in jewelry, technology, and even held by central banks as part of their reserves. So gold doesn't grow like a stock or a business. It grows because of scarcity, demand, and economic conditions. That's why people see it as a long-term store of value. In 3rd place, we have the S&P 500. With an impressive average compound annual growth rate of around 11%, the S&P 500 proved to be a reliable wealth multiplier over the past decade. Comprising the 500 largest publicly traded companies in the US, this index represents the backbone of the American economy. Why has the S&P 500 been such a solid investment? First, diversification. By investing in the S&P 500, you're spreading your risk across multiple sectors, from technology and healthcare to finance and consumer goods. When one industry dips, another rises, stabilizing your returns. Second, resilience. Despite market volatility, recessions, and geopolitical uncertainties, the S&P 500 historically rebounds and reaches new highs. Companies within the index continuously innovate, adapt, and grow. Third, simplicity. Investing in index funds tracking the S&P 500 is straightforward, affordable, and accessible for anyone, from beginners to seasoned investors. Sure, it won't give you overnight riches, but its steady, long-term growth can turn consistent savers into millionaires. Coming in hot at 2nd place, we have tech stocks, specifically the Magnificent Seven. These tech giants, including Apple, Microsoft, Amazon, Google, Meta, Tesla, and Nvidia, delivered a stunning average CAGR of around 20 to 25% over the last decade. They didn't just grow, they transformed entire industries. What's behind their spectacular growth? First, innovation. These companies redefine markets, create new industries, and constantly evolve. Think smartphones, cloud computing, artificial intelligence, and electric vehicles. Second, scalability. Tech companies have incredible margins and global reach. Their products and services scale rapidly, reaching billions of users worldwide, creating massive profits. Third, adaptability. These tech giants swiftly pivot, investing heavily in research and development to stay ahead. Even during economic downturns, they often emerge stronger and more profitable. While tech stocks can be volatile, their potential for explosive growth makes them irresistible to investors seeking high returns. And now, the undisputed king of the decade, Bitcoin, taking first place with an astounding CAGR of 70%. Bitcoin's performance is nothing short of legendary. Early believers who invested a small amount 10 years ago have become multi-millionaires or even billionaires. Why did Bitcoin explode? First, scarcity. There will only ever be 21 million Bitcoins, creating digital scarcity similar to gold, but even more strictly capped. Second, mainstream adoption. Once seen as niche or speculative, Bitcoin has increasingly been embraced by institutions, banks, and even governments, boosting its credibility and value. Third, decentralization. Bitcoin provides an alternative financial system, free from traditional banks and governments, appealing to those seeking independence and security. However, Bitcoin isn't for the faint-hearted. Its massive volatility can create fortunes, or lose them in a matter of days. But for those who held on tight, Bitcoin proved to be the ultimate investment ride of the past decade. And that's it. Those were the top 5 best performing assets of the last decade. Pretty eye-opening, right? Now the big question is, will the next 10 years look the same? Or will we see a completely different set of winners? Maybe crypto will dominate again. Or maybe something entirely new will take the spotlight. What do you think? Drop your thoughts in the comments below. We'd love to hear your predictions.